Sun Pharma is among the few Nifty losers today, slips over 2.5% in today's trading session after a mixed fourth quarter. Growth concerns weigh as management expects mid to high single-digit top-line growth going ahead versus high to low double-digit growth in the past.
And ITC, that one's higher in trade on the back of its Q4 numbers. The cigarette volume growth comes in line with expectations of around 4 to around 5%. The revenue beats estimates.
Container Corp slips more than 3% on the back of a muted performance in the fourth quarter. Profit declines year-on-year due to changes in calculating depreciation while margin 2 contracts. However, the management tells CNBC-TV18 that they are targeting 13% volume growth in FY26.
Well, Honasa rebounds in trade. The stock is up close to 14%. This as the company shows early signs of recovery in Q4. The company reports a 13% rise in the revenue on a year-on-year basis, while volumes grow 21%.
A couple of other stocks on our radar as well. HCLTech and Power Mech projects are buzzing in trade with gains of 15 and 12% respectively after posting strong fourth quarter numbers.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and in just a bit, we have that at the top of your screen. The Nifty and the Sensex, they're bursting away. The mid-cap index as well is doing well. And the number of stocks advancing more than the number of stocks declining. Mangalam, it's looking pretty good. All
in all, it's a good Friday for bulls so far. The question is, how do we end today? Because from levels...
For the markets.
For the markets, obviously. At lower levels yesterday, we saw some purchase. We managed to grow above the 20-day moving average for the Nifty Bank in particular, closed just at that, and now it's doing well. Let's see where we go from here. 24,850, 24,900. That's the expected congestion zone. Do we go ahead and cross that or not? The broader market's telling you that at an index level, even though it's underperforming, there are nearly 50% stocks, more stocks in the green than the number of stocks in the red. And as we speak, a bunch of stocks actually spiking. We have the mid-cap IT pack, which should come up for you. First Source is up at the high point. We're seeing some recovery in Coforge and Oracle as well, and Persistent Systems, all these stocks at the high point of trade. And it's ahead of summer, there were unseasonal rains, all of that happening. Varun Beverages, no problems out there. You know, a lot of Pepsi being sold, I guess. That stock up around 3% as well. But good time to get in Manas Jaiswal for a quick technical check on the market. Manas, what do you make of the indices so far? I mean, it's been all over the place. It's been choppy. It's been trending lower. Thereafter, it surprises on the upside at some point. And it's meandering around a range. How do you trade this?
Good morning, Mangalam. Good morning, Nigel. Yes, Nifty has taken support near 20-day moving average. And now, today, it has regained its 10-day moving average. But again, I think one should remember that Nifty has a strong resistance in the range of 24,850 to 24,950. So, for turning bullish, I think Nifty will have to cross 24,950. If it breaks that, then definitely you can expect almost 500 to 600 points rally on Nifty. But at current levels, I think you should wait for some more time. And if you're long, then definitely you can hold it. Keep your stop loss below 24,600. But fresh long should be taken only on a breakout above 24,950. Even Bank Nifty has taken support at 20-day moving average and it regained 10-day moving average. But here also, Bank Nifty has strong resistance in the range of 55,400 to 55,500. So here also you can create fresh long only on a breakout above 55,400. And if you're long, you can hold the Bank Nifty also and keep your stop loss below 54,600.
Okay, all right. Manas, hi, good morning. Good to see you. Well, a couple of stocks are spiking up actually as we speak. Force Motors, that's one name that's now almost at around that 11,000 odd mark. So I think we should pull up an intraday chart. Good move is what you're seeing on Force Motors. But Manas, what else is on your radar in terms of stocks?
So first one is a buy call on MFSL, Max Financial, where the stock has been making higher tops and higher bottoms from the level of around 1225. Today, stock has given a fresh breakout on the chart, so take a long position here. I think here one can keep the stop loss below 1424 and target would be around 1500. And second is Tata Chemical, where stock has taken support near its 50-day moving average. And looking at the pattern, because on the hourly chart, stock has already started making higher tops and higher bottoms. So one can create long position here. Stop loss should be around 859 and target would be around 890.
All right. Do you have any call on names like Honasa and Metro Brands? Both of them are now spiking. In fact, Metro Brands is up around 6.5%, was up 3% earlier. Management sounded reasonably confident on the channel. The stock's up around 7% now. Honasa has taken a sharp knock. It's halved from the top. It's early signs of recovery, and there is a purchase that we're seeing in the stock today of 14% right now. Do you track these?
Yeah, I think in Metro brand, definitely you can take a long position for a little bit long term for next 3 to 4 months time. Then I think even at current levels, you can create long position. A stop loss should be around 1160, and I think here you can expect the target of around 1475. In Honasa, I think you should wait for some more time because yes, stock has broken its 200-day moving average with great volumes. But I think you should buy the stock on corrections, not at current levels. On correction near 300 to 290, you can create long position. Stop loss should be around 279.
All right. Anything in mid-cap IT that you like?
In mid-cap IT, I just a few minutes back I saw persistent where stock has taken support at 20-day moving average and it regained 10-day moving average. So I think if you're a trader and you can keep the stick stop loss below 5,600, then here you can take a chance. Keep your stop loss below 5,600. Target would be around 5,900.
All right, take that point, Manas. Thank you so much for joining in. Just as we were having this conversation, the Nifty's crossed past that 24,800 mark as well. And this one's led by IT and ITC. So look at ITC. Now that one's zoomed to the high point of trade. Decent volume growth on the cigarette business, notwithstanding the margin compression that we've seen or the slow growth in FMCG. The street likes these numbers. Also, given the fact that the stock has been an underperformer, trading at 23 times. So valuation supportive as well. With that, let's get you some ideas for profit. We have our colleagues from Money Control Pro joining in. Nitin Agarwal has a stock.
The company that I have chosen for today is Hero MotoCorp, a leading manufacturers of two-wheeler in India. Let me briefly touch upon its Q4 number. The company recorded a 4.4% growth of its growth in its revenue on a YOY basis. This was driven by 5.2% improvement in its realization. Hero is seeing a significant surge in the demand, particularly in the rural area. Global business and the EV business continue to stay strong. The overall EBITDA remained above 14%. Now, there are a couple of factors that make us upbeat about the company. First, the demand for the two-wheeler segment and the motorcycle segment remain positive, with the wedding season in full swing. Rural demand particularly continues to show a strong momentum, as is evident from the monthly number reported by the company, and the government's focus on the rural infrastructure. Rural economy continues to augur well for the company. Further, the Hero MotoCorp continues to accelerate its premium portfolio and has been launching aggressively to capture the premium segment, which has been doing pretty well for the company. In addition to that, the company has been launching new scooters for the capturing the growth that is being witnessed by the scooter segment. Currently, company holds around 4.7% market share in the electric vehicle and is expanding its market share aggressively there as well. In terms of valuation, the company currently trades at around 14.5 times FY27 projected earnings, which we believe is very reasonable for the company like Hero MotoCorp.
All right, thanks a lot for that. With that, we take a short break, get you more on the markets and individual stocks. A lot of stocks making news this morning. All of that on the other side.
Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, Sun Pharma, that's one of the top losers today. It's down close to 2.5% after a mixed showing in the fourth quarter. This especially as the growth concerns weigh. In fact, let's listen to what the management had to say when they detailed their quarter 4 earnings. Let's hear out their call on the growth expectations.
In FY25, our global specialty sales were up 17.1% to reach 1.216 million or 1,216 million. In Q4 financial year 25, our global specialty sales were up 8.6% to reach 295 million. On the guidance of FY26, we expect mid to high single-digit consolidated top-line growth for FY26. We now expect our FY26 R&D spend to be 6 to 8% of sales for the next year. No, I think we've always consistently maintained that we continue to look at acquisitions which will help us create value. Because any business that we acquire, we should be able to run it significantly better than the current owners. Or we should have significant potential synergies. Otherwise, it will not justify the acquisition premium.
Well, from the top Nifty loser, let's look at the top Nifty gainer right now. Among the top Nifty gainers is Eternal, which is moved to the high point of trade. But the second one is ITC. And ITC reported its numbers yesterday post-market. It was a mixed quarter. There were some hits and some misses as well. So if you look at the overall reported numbers, on the revenue front, there was a beat. The company reported revenues upwards of 17,000 crores. The street was working with a number of 16,820 crores. Importantly, the cigarette volume growth, which is the mainstay of the company, came in at around 5%, which was, again, at the higher end of expected 4 to 5% mark itself. Though all of this did not, glow down to the EBITDA, because the EBITDA came in at a little shy of 6,000 crores. The street was working with a number of 6,100 crores. Margins came off as well. The company alluded this to a lot of weakness that we've seen in, or rather a lot of inflation that we've seen in a lot of the inputs in the FMCG business. And that explains the weakness that we saw in the FMCG growth as well. 3.7% growth out there versus street expectations of 6 to 8%. Out here as well, the margins compressed 270 basis points, higher end of the expected range of 200 to 300 basis points compression. What is it that the management said? Very high input costs is what we saw. And also at the same time, the FMCG margins, which saw a decline of over 270 basis points, let's see a smidge of a recovery quarter on quarter. X of notebooks, the FMCG revenue growth has actually been 5.4%. So that tells you that maybe going forward, FMCG business also comes back. From the highs, we've seen a decline in the raw material prices. And more importantly, the company has also announced a dividend of nearly 8 rupees per share that supports the stock. The stock hadn't done much. In fact, from its peak, it has seen a correction of almost 17-18%, trading at 23 times. No reason to sell on those numbers, no reason to buy. But then the dividend sweetener comes in. The stock up 11 rupees today.
Okay, all right, Mangalam, thanks for that. Well, let's focus on defense stock. Centrum Electronics, the stock is up close to on 7%. It released its Q4 numbers, so the stock is still holding with gains. But I think from the highs of the day, it's seen some kind of profit taking. Ria joins us to detail those numbers. Ria?
Well, good morning. Centrum Electronics has been trading higher today after reporting a very strong set of numbers in Q4 of FY25. The revenue has gone up by around 24% over the previous year, while profitability has also seen a very sharp turnaround. EBITDA has more than doubled, up around 128% over the previous year. Margins have also expanded by a solid 514 basis points on a year-on-year basis, now coming in at 11.3% in this quarter. Net profit this time around has stood at 22 crores versus a loss of 7 crores that we saw in the same quarter of last year. Now, this momentum is also backed by a very strong order book of around rupees 1,861 crores as of the end of Q3 of FY25. And out of this total order book, the defense and space segments contribute over 51%. Going forward, we will be watching out for the management commentary for order book growth, further profitability improvement, and a ramp up of opportunities in the defense space as well.
Thanks a lot for that, Ria. For the time being, we slip into a short break. On the other side, we'll get you more on markets and stock-specific action. Stay tuned.
Let's keep an eye on a couple of these names. We have Zomato, Eternal, that is, has spiked to the high point of trade, and we are seeing Swiggy. Let's see whether Swiggy is following suit or not as well. Swiggy is up around 1% or so. But speaking about Swiggy and Zomato, there will be a moment of profit from Swiggy. That's the word coming in from Process CEO Fabrizio Bloisi. He spoke with Ritu and he commented on how Process is keen on growing in India.
So if you look to the food delivery business of Swiggy, it's doing quite well. We are growing well. We are growing more than the expectations the people had. So we are doing well. And the company is profitable and is increasing profitability. Sorry, the food delivery part.
Yeah.
The quick commerce is a younger business.
High cash burn too.
Yes, I know about that. I think India specifically, it's interesting. It's different from the rest of the world. The rest of the world is investing, is more controlled in the quick commerce investment. India is investing not only Swiggy, but everyone much more.
Yeah.
My point is this is a cycle. There will be a moment after this moment of high excitement that the cash burn are going to reduce, and I think we are prepared to. I think we are executing well. We are prepared to invest when it's time to invest, but there will be time to profit from this new business too.
So for the time being, do you intend to continue holding on to that 20+% stake that you have in Swiggy even after the IPO?
Yes, we are not in a mood of selling. We are in a mood of keep investing in India.
Okay.
So our intention is to keep investing and invest more, generally in India.
Right, with that, what we'll do is we'll wrap up on this edition of Chartbuster. Stay tuned. Trading Hour comes up next as all the indices on the screen are fairly in the green.